Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and get a lot smarter. And I know we will get a lot smarter by talking to our next guest. Here with me now is Executive Fellow at Harvard Business School and former Medtronic CEO Bill George. Let's start off. I know we want to talk about some election stuff, Tim Walz and Kamala Harris, but you have to have seen what happened with Starbucks and Chipotle. Like when you see news like that, as someone that led Medtronic for 10 years, sat on some of the biggest boards around, ExxonMobil, I believe Target too as well. What's your first thought?
Well, it came as a bit of a shock. I know Lakshman Narasimhan well, and also Howard Schultz well. I don't know Brian Niccol. They seem to have gotten a very good guy in Brian. I feel sorry for Lakshman. He never really had a chance there. They hit some rough patches in China and elsewhere with some protests after the Israel-Palestinian war started. So, but that's 25%. That's pretty impressive. That's certainly a vote of confidence in Brian Niccol that he's going to turn things around. Look, Howard, this is the fourth time that Howard intervened and seemingly intervened and replaced the CEO. I guess the board made that decision. Howard's not on it. So, yeah, we'll see. I wish Starbucks well. I use it a lot myself, and I hope they do well. It's always hard to sustain a retail growth forever. I was on the board of Target for 12 years, Brian, and you have ups and you have downs. So I hope they'll come back into an up period.
Yeah, Bill, I think half my paycheck goes to Starbucks. I mean, I can't prove that. I can't show any receipts. It's just like an inkling, and maybe I can feel it in my Bank of America account. But like, look, I mean, Brian Niccol's coming into a hotbed of crisis, and this iconic global company that is not used to seeing transactions down and consumer backlash in the U.S. because of pricing and problems overseas. As a CEO, how do you that first month? How do you go about changing a company in crisis? What are your first moves?
Your first moves are to get out into the operation, find out exactly what's going on, talk to consumers, and understand the problems. I'll give you an example. I'm in New York, and I go across the street from my hotel to get a cup of coffee at Starbucks, and I order the coffee. I'm staying there waiting, and about 8 people come in ahead of me that have ordered their coffee online. So I say, well, wait a minute. And I used to go into Starbucks to kind of sit there, and there are no tables anymore. So they're going through a market change, and I think a new CEO's got to adapt rapidly to that market change. The business is changing right out from under them. They can't change things easily in what's going on in Israel, but they can make those changes to understand how the market's changing. And I think any CEO's got to do that rapidly. I was on the board of Target. We had to change very rapidly with conditions and move in, and that was one of Target's great successes, is being able to be such a rapid response. Look, at Medtronic, we didn't have to move that fast, but we did try to move well ahead of our competition by a couple of years.
Starbucks, the local Starbucks doesn't know who you are, Bill? I mean, we got to get you your coffee quick.
They could care less who I am.
That's not right. Well, you have to make a few calls.
When it takes away the essence of what you are, then you got to figure out, how do you get it back? How do you appeal to this new market? If it's going to be a drive-in market, how do you? Because the whole game has changed. Let's face it. Ever since COVID, this is true for a lot of businesses, Brian, that their fundamental business model is changing. Look at Best Buy. They're doing a lot more online than they ever used to before COVID. And so the whole situation with consumers has changed radically, and you have to adapt. Today, if you want to be a leader, you have to be a rapid adapter. You cannot just have a fixed plan. You can't have a fixed strategy. Your strategy has to be updated almost every day and tactically to adapt to changing conditions.
Let me see if I can channel, and we'll move on a little bit, but let me see if I can channel your veteran board experience mind here. So from the reporting that we've done here at Yahoo Finance, it would suggest that the board met at Starbucks and they had reached out to Brian maybe a month and a half ago, 2 months ago, to get the ball rolling, while Lax he was still running the company. A week and a half ago, he's still doing earnings. And is that normal behavior for a board? Is that just business being ruthless in its greatest sense or ugliest sense?
No, but I think there were a lot of pressures on them. I'm not sure Lax was really even aware of what was going on. I haven't spoken with him. I did leave him a note yesterday, but I've not had a chance to speak with him. But I'm not sure he was aware of what's going on. No, this is highly unusual for a board. Normally, they would take the action and then set up a board search committee to find a new CEO. In this case, they had it ready to go on day one, which, again, is highly unusual.
Is it hard to Is it how do you go about fending off activist investors? You know, I look back a year and a half ago. I think it was Salesforce was attacked by numerous activist investors.
Yeah.
I've never seen a Starbucks have a Starboard and an Elliott. I mean, two of the biggest names in this field pushing for changes. And by all indications, they're still major shareholders and they're not going away yet. I mean, from a board perspective, how do you get rid of folks like this?
Well, I think you got out in front of them. You don't let them come in because your results are good and you're meeting your numbers. Now, when you're not meeting your numbers, you got a different situation when that activist comes in. And then you have to decide, do you meet with them and just what they say, does that make sense? Sometimes Starboard and Elliott are not unreasonable, unlike, say, Icahn and Peltz that want to run the company. And so you have to decide, can we make some changes, work with them to make changes that will meet their needs as well as ours, because we have the same shareholders we're interested in. The question is, are they doing it for the long term or a short term game? And that's really the question. And so if they're not at a certain point in time, then you have to go to battle stations and you're going to have a war. And that's going to take all the CEO's time. Somebody else got to run the day-to-day business because it's going to take all your time. So before you get into that. And we've seen some unfortunate ones like Unilever that's not doing well. And so you worry about those things. So, yeah, I think as a CEO, I coach CEOs. Always have your board ready for an activist to come in and, frankly, think like an activist. What would an activist do? And are we doing those things that a sound activist would do? And like I say, a lot of the ideas Elliott and Starboard had are not so bad. They're pretty sound.
You, I'm sure you know this, but succession planning for a board is vitally important. If the current CEO has to leave for whatever reason, I mean, getting that successor in place is so critical. I mean, I think back to Starbucks. I go back to Jim Donald, didn't work out. Kevin Johnson, mixed emotions. Lax here is out. Like, why is this company not getting succession planning right? And then Bill, I go over to, I look at Disney. You know, we still don't know who's going to succeed Bob Iger for the second time.
When does a founder move on in the case of Starbucks? You know, Howard's not on the board anymore, but he still exerts considerable influence. I think you got to know when to hold him, when to fold him. The founder needs to move on to other things and let the board run it. And so, but founders can exert a lot of pressure on boards. I mean, you know, you look at the Microsoft and what Satya's done, but Steve Ballmer was there arguably too long. So that's, I think, but succession planning for boards is a real problem. Look at Boeing, look at GE. Now Boeing's finally got a CEO that understands the aviation business after 4 or 5 successive failures. So to its credit, but General Electric had that problem too, real problems with succession planning. So it isn't just in high tech, you see it in Wells Fargo, a bank like that had real problems. So the board needs to do a better job of long-term succession planning, not just emergency planning.
I'm still trying to figure out Dave Calhoun at Boeing. I don't understand the pick. Don't know how he was able to stay on for so long, Bill. But you have written, and I correct me if I'm wrong, I think it may have been on LinkedIn. You think it will take 10 years for Boeing's new CEO, Kelly Ortberg, to turn the company around. What? That's a long time. He'd be 75 10 years from now. Why do you think so long?
Can you imagine a high-tech company, Boeing, has not had a new single-aisle aircraft in 60 years?
I can't believe it. I can't believe it.
The 737 was designed back in the 60s. I mean, this is kind of unbelievable. And so that's how long it's going to take to get a new aircraft out. And he can get a lot done in 5 months, 5 years, but he's got to change the fundamental culture back to an aviation. He's moving to Seattle. Good for him. They should move the whole company to Seattle. That's where the headquarters should be. That's where their people are. That's where the engineers are. That's where the planes are designed. Why they moved to Chicago and then now to Washington is crazy in my mind.
As a new CEO that's coming into another crisis, I mean, arguably worse than what's way worse and more important to the world than Starbucks, is it wrong to think that Kelly comes in and cleans house? Do you think he needs to clean house and almost reset the leadership team?
Well, I think he does to a large extent because they've been focusing entirely on short-term shareholder value, and they forgot they're in the aviation business. You can't create long-term value by buying back stock. They bought back 60 billion of stock. They have a huge debt problem. They have huge cash flow, and he's got to get that fixed. But in the meantime, he's got to satisfy his airline customers. He's got to come up with some short-term improvements in quality while they're working on a new single-aisle aircraft. And that's critical. They've had problems on the defense side, so it's an operational problem. He's got to fix it, and he's got to move fast, and he's going to need some help to do it from outside Boeing, I'm convinced.
How hard is it to change a culture? And you mentioned 10 years for him to turn the company around, but there's still a lot of people not in the C-suite at a Boeing, many layers down on management and various management levels that arguably have not done a good job, who have contributed to the many problems at the company, culturally, financially. What does it take to get those people's minds changed, and how do you essentially push them out the door and sweep in a new generation of forward thinkers?
Well, you get back to, and you have to be younger people now coming in, but you're not going back to the old guard, and that's what they've done, is you have to be out with your people, with the engineers, and understand what's going on. Be with United and Delta and American, the major airlines. Be with Singapore and Emirates and the major airlines. You need to be out with these people all the time, seeing what their needs are and doing everything you can to persuade them you'll meet their needs. And that is key. But you're going to have to bring in a team around you that can do that. Not just think like the old ways. It's the new. You really have to think totally differently, because they've been on the wrong track for 20 years. That's a long time. You don't change a company that's been going downhill for 20 years in 20 months. That's why it's got to take a long time. A
really bad pun coming up here, Bill, but they were on the wrong runway. I mean, you you set it up for me. I mean, I just had to take it and slam dunk it and move along. But hang with us, Bill. We're going to go off for a very quick break. We'll be right back. More opening bid coming right up. All right, we're having a really great conversation. One of my favorite people, and that is Executive Fellow at Harvard Business School and former Medtronic CEO Bill George. Just a real wealth of knowledge in all things leadership. Bill giving some great insight into Starbucks and that company's leadership crisis, Boeing CEO of a big-time leadership crisis. Now, Bill, let's talk a little bit about, I know you've been very vocal out there on social media, messaging or talking about Tim Walz as the running mate for Vice President Kamala Harris. What do you see in Tim Walz that you think would make him a very good leader for the country?
Tim Walz is like every man. He taught school for 20 years. He's in the National Guard for 24. He is out with the people all the time, and he really understands working people. I'm of the view, Brian, that we have neglected our frontline workers. I don't care if they're baristas at Starbucks or factory workers at General Motors. And I think the new generation of CEOs like Mary Barra at General Motors is trying to bring that back. But for decades, we kind of neglected the frontline workers. All the income went to the top, and we try to minimize it. Can you imagine a country that has a $7.25 minimum wage? I mean, this is ridiculous. And I think the progressive companies are going way ahead of that, and they're doing well. And so I think we need to reconceptualize. Now, that's what Tim Walz understands. He understands working people and what their needs are and how you meet them. And look, what we've seen in Minneapolis is have workers that feel they have a good quality of life. They're going to flourish. Medtronic's gone from 4,000 people to 96,000. The companies here have flourished. United Health, I think, is now 450,000 people. They have flourished here because they provide a good quality of life for their people. Education systems, healthcare systems, the environment. I was out on the lakes yesterday, and that's the kind of environment you want to provide for your employees. That's the only way you're going to build a great global company, is to attract the best people from all over. And I think that's what Tim Walz really understands and has done here. Take Mayo Clinic. Mayo Clinic now has, I think, 44,000 people in Minnesota alone and 75 to 80,000 nationwide. But he has worked with them to create a destination medical center, to bring in better higher quality doctors and continue to recruit here in Minnesota, and frankly, to create a whole infrastructure around. So we have great infrastructure here, except maybe for some venture capital. We'd like more of that. We have great infrastructure. So now the high-tech companies are located in Rochester, Minnesota. This is a great thing. I'm very pleased to see, and I hope that this kind of stable approach to a diversified economy will take hold in our country.
Quick aside, Bill, you mentioned Mary Barra, GM CEO. How good is she? I spent the day with her taping for one of our series. We went through an electric vehicle manufacturing facility. Holy cow, blown away. The stock has finally started to reflect, I think, a lot of her hard work, but wow, I don't think she gets enough credit for what she's been doing in the auto industry.
Well, you got that right. She was one of my students back in 2013.
Really?
Or she was head of product development. Terrific. And I know Mary fairly well, and she is terrific. But see, she started at 18 on the production line.
Yeah.
She worked as an inspector. She ran the quality department. She ran product development. She knows the business. GM went through a whole series of financial people coming out of the Treasury Department, like Rick Wagner and Fritz Henderson. They didn't really understand the business of designing automobiles. And you used to ask about Boeing. Why does it take a decade? Well, it takes a decade in General Motors. She's had a decade. It's tough. And you got to go through a lot of changes, but she's really done a terrific job. She's also, by the way, elected by the Business Roundtable nationally to be chair of that. So she's taken on that assignment too. So she has a very prominent role, and she is really grown in the job from what I've seen.
Yeah, no, she's phenomenal. Yeah, those other executives, Bill, over there, they GM, they just used to slap a badge on the side of the car and ask you to spend an extra 10 grand for it. Even though the car is the same damn thing as the base model. I mean, come on,
well,
GM.
That's the problem. That's what Boeing's trying to do. You got to come out. Medtronic's got to come out with a new product every several years. You know, you can't just kind of keep the same old product out there and same old technology. So they lost out to the Germans and the Japanese. Now she's bringing it back and really focusing on electric vehicles and doing a fantastic job.
I was talking to a bunch of CEOs recently, Bill, and they appreciate what Kamala Harris and Tim Walz represent. Calm, theoretically calm leadership when the country can use it. But they do worry about the regulatory environment under a potential Harris administration. Do you worry about that?
Well, I think the FTC, Federal Trade Commission, and the SEC have been very aggressive the last 3 years, and they've in many cases overreached. So I believe in strong, great American companies. So let's let Amazon build up. Let's let Facebook and Google and Microsoft in particular build up as great companies that can, if you will, dominate the world markets. So yeah, I think they've been a bit aggressive. And hey, the FDA. That Medtronic worked with is very responsible, and Medtronic really appreciates a strong FDA. So we don't want to get rid of the regulators. We just want them to do their jobs well and not overreach.
I was talking to another CEO too, and I asked him what his capital expenditure spending would be if the Trump tax cuts roll off, and he said it fairly blunt. Bill, he says, "Look, I'm going to have to pull back on spending." Are you concerned that if those tax cuts do roll off and President Trump, let's say, is not reelected, we get a 4 or 5 years of higher taxes and businesses pull back? How does the CEO mindset go in that environment?
Well, the corporations have gone from like 33 down to 21, so they're enjoying that. I think a lot of them have been satisfied 28. I think some moderation in the tax rates is called for. Business should pay its fair share of taxes, but I don't know the ideal number. But I don't think it's either one way or the other. And actually, former President Trump's talking about more tax cuts, and that was going to put trillions of dollars of deficit into the Treasury. So I worry about that a lot. But I do think that we have to have a fair tax regime. Business needs to pay its fair share, but not an excessive amount. We shouldn't punish business at all, and particularly smaller businesses, which need to have a chance to grow up, because like my former company, Medtronic, they grow up from a founder to have 96,000 people, and Best Buy and all these companies started out with 1 or 2 people. So I do think we need to have a fair tax regime. And I think that's what we tried to get here in Minnesota, and that's what we've had nationally. So I think some moderation. Businesses, Brian, let me say this. Businesses want predictability. They don't want instability. They don't want 60% tariffs on China for fear the Chinese are going to slap a big tariff on them. They need to have predictability. They want to grow their business. So we need an economy that's growing now. We need to keep this economy going that we have right now, which is growing healthily. The jobs that come down because of the pressure the Fed's exerted, but I think you're going to see the Fed cutting interest rates as inflation comes down. We got a big report coming out today, but inflation dropped from 9 down under 3. I think 2.6 was the latest number I saw. So if we keep that coming down, I think we can have a very stable economy. Hey, the U.S. has come out of COVID better than any economy in the world. There's no country in the world that's done as well post-COVID as the U.S. has the last 3-4 years.
Last election season, Bill, I think a lot of employees at very large companies wanted to hear more from their CEO via town halls, internal memos. Some decided to speak out, some necessarily didn't. Some did it in their own way. Should a CEO be speaking out into this coming election season? I guess what lessons should the CEO have learned 4 or 5 years ago, and what can they apply to it today?
Well, I don't think CEOs should be advocating for one party or the other, or one candidate or the other. I think that's wrong. Each person, they should be encouraging their employees to vote, give them time off to vote, and saying what's important to the company, how to think about the election. If we want to continue building jobs here, here's the kind of economy we need that supports growth, that supports our employees. So that's what they should be doing. But I feel very strongly on the board's eye, we should not be taking political positions, because you're going to lose that game. You're going to be one party in one time, another party in the next. You can't play that game. I think it's a huge mistake. And so I think CEOs should have their own positions. And I think you see a big difference here between the owners, which are wanting to have a big position. Some of them contribute huge amounts of money to political campaign, and the hired CEOs like I was. I don't think you'll see the hired CEOs. Most of them are hanging back right now because they don't want to be caught between one party and the next.
Bill, before I let you go, and I don't think I've asked you this before in our numerous chats, but what was your toughest moment as a CEO or a board member at one of these big companies?
2008, September 14th, Goldman Sachs. The market collapsed, and we had fortunately built up an additional $100 billion in liquidity. So we'd had like $125 billion on that fateful day when Lehman went under. And every day there's another bank falling, and we were very concerned. And fortunately, Warren Buffett got involved and stepped in and put in $5 billion with a promise another $5 billion to help turn around our stock. But it was touch and go. I felt like the airplane was going down and we're hanging on. And I'm just a passenger. Lloyd Blankfein, Gary Cohen did a brilliant job of managing through that, as did Jamie Dimon over at JP Morgan. Those two, because we had liquidity. If we hadn't had the backup liquidity, if we hadn't been more conservative, if we hadn't reduced a lot of risks in our portfolio, we could have been in trouble too. But Goldman managed to navigate through that. But that was my diciest time. We had 16 meetings, and then we had challenges the following year when challenging Goldman in other ways on legal. And so I ran an organization called the Business Standards Committee for the board, and then we had a huge management committee working on looking at the whole bank, top to bottom, every practice we have. How do we communicate? Do our customers understand the risk?
You, Bill George, are indeed on the Mount Rushmore of CEOs. We'll leave it there for now. I'm sure we'll be talking to you again very soon. Executive Fellow at Harvard Business School and former Medtronic CEO Bill George, always a pleasure to get some time with you. We appreciate it.
Thank you, Brian.
All right, a quick couple parting thoughts before we let you go. A viewer mailbag. First up, some of you have asked me on social media what these bruises are on my arm. I actually dropped a dumbbell on my arm during one of my 8 boot camp classes during the week. That's just me. You've also asked, number 2, what this glass ball is on my desk. This is my crystal ball. It's actually a piece of furniture from the Yahoo newsroom here. I just like to make predictions. It gives me good vibes. Number 3, some of you also asked me what my favorite valuation metric is. I'm geeky. I used to be an analyst for 10 years. It is the forward price to earnings multiple. Pull up any stock, go to the stats page on Yahoo Finance. You will see the forward price to earnings multiple for the company. Always a good starting point to get you thinking on what a company and a stock may be worth. And last but not least, quick plug for an awesome opening bid episode with Alpha Simplex Chief Research Strategist Catherine Kaminsky. That just dropped on your favorite podcast platform of choice. Give it a listen. She rocks. She's talking about a potential market bottom. Tune in, listen in, and share it. That's it for Opening Bid.